Hello everyone, today's video is all about inheritance tax planning, specifically business property relief. So BPR, as it's known, was introduced in the 1970s actually, and it's basically, it says that when you die owning shares in your company, family business, that you don't have to pay inheritance tax on the value of the business. Because the policy behind it being that it would be unfair for the next generation to have to sell the business, break it up in order to pay inheritance tax on the value of the business. So businesses pass to the next generation tax-free. So this has evolved, this particular tax relief, the BPR, over the last 4 decades. And now it's actually quite generous insofar as it doesn't just apply to your family business. So it can apply to certain other investments. And if you invest in these shares that qualify for BPR, those shares fall out of your estate for inheritance tax, because normally if you just invested in stocks and shares on the stock market, FTSE 100 companies or whatever, they would form part of your estate when you die, subject to inheritance tax. But shares that qualify for BPR don't. So specifically we're talking about AIM stocks. So those shares listed on the AIM stock market, the junior stock market in the UK, alternative investment market as it's known. It's been around for 25 years. And the companies on there, it was intended to be almost like an incubator for the larger FTSE. So companies would start off listing on the AIM, regulatory light touch, and then once they grow, they would then graduate to the full FTSE stock market. Now, what's happened over the last 25 years since the AIM's come in is that many companies have just stayed on the AIM. They haven't graduated to the FTSE, even though the size of them now would be comparable to those that would qualify for the FTSE, but they've chosen to stay on the AIM stock, stock market, which is great for investors who want to take advantage of this business property relief IHT break. So you can invest in some of these shares on the AIM, and as long as you hold them for 2 years before you pass away, they will fall outside of your estate, so no inheritance tax. Now, from an investment point of view as well, there's some good investments on there. So the FTSE is generally considered a little bit stale in the UK right now. There's no real exciting kind of stocks on there, no tech stocks per se, whereas on the AIM, there's actually quite a lot of interesting stuff going on with the companies there, particularly the likes of the fashion retailers online like Boohoo and ASOS, which have grown massively in the last 10 to 20 years, hoovering up the likes of more traditional firms such as Topshop and Debenhams. So you could invest in the likes of Boohoo, ASOS, and get inheritance tax relief after just 2 years of holding those shares. So do have a look at investing on the AIM. Not every company that's on the AIM will qualify for BPR. Certain companies that invest predominantly in real estate, they don't qualify for this inheritance tax break, but there are still a heck of a lot that do. So more companies on there qualify than don't. So worth having a look in terms of your portfolio, where to invest, and also with an eye ahead to inheritance tax planning, have some shares on these types of investments, and they will fall out of your estate for inheritance tax as if it was similar to you having your own business. So that is just a quick overview on business property relief, which is a form of inheritance tax planning. If you like this video, do subscribe there, and I will see you soon.